Hi there guys, hope you're all well and welcome back to another video. Before we go into this, I just want to say thank you for the support on the last two videos. Obviously the verification pass of FTMO did really well, and then a few of you did actually gain some valuable information from the weekly outlook. So before we get started on that guys, I do want to just say thank you. If you follow me on Instagram currently, you will know what has happened with these trades. You'll have followed the journey from this short up here all the way to the long which was taken this morning. So if you don't already, my Instagram is in the bio, top link in the description. Give it a click and you'll be able to follow me straight away just to see stuff like this before it's happened, and obviously hopefully you can learn something from that. So what we're going to go over is how I turned this position here based on 5% risk into a 30% risk-free long from this position down here. Now, because this video is based on compounding and how you can use runners to compound positions, I'm not going to go into exactly why I took these trades, so don't worry about the confluences. I'm simply just going over the power of compounding, how you can do it, and how you can quickly grow your account, obviously, by doing this. I do want to do a disclaimer. This is my personal account. For that reason, I do risk 5% a trade because my data supports that. It is a higher risk approach, and I am not saying to do this on your own money or FTMO. Obviously, you risk what you want to risk, but please don't watch this video and then think, yep, I'm going to risk 5% because Sam did. You know what I mean? So let's get straight into it. This trade here, like I say, we're not going to go into it, but this trade here, I originally had a 50 pip stop loss and I risked 5% on the trade. So what I would normally do is take a partial at 1-to-1. The partial on this trade, obviously, would now be at 50 pips, meaning once I've taken my partial, that 5%, I would then close 50%. So then the lot size would be halved, meaning 50 pips is then worth 2.5%. rather than 5. So with this initial trade, I did take the partial. I closed out 2.5% and banked that. And then what I did, I left a runner for, obviously, the next trade. Because of that, when this trade triggered here, and what I want to do is quickly show you the trade whilst I was in it. We're not going to go into lot sizes because at the end of the day, it does not matter how much money I made on this trade. We are just interested in the percents. So with this, obviously, that's proof of the trade triggering. But as mentioned earlier, if you do already follow me on Instagram, you will already know this. So because this trade now is running risk-free, what I can do is use the unrealized profits from this trade and increase the risk on this trade here. So because of that, I didn't choose to risk the full position. But what happened with this is that because this trade was running 4-to-1 at this point, I risked, instead of 5%, I risked 8% on this trade. And the 8% was risk-free. Because if this trade was running 10%, if this trade lost, i.e. the buy here, if the buy lost, this sell would be running in even more profit. So what I could do is close the short to pay for the long. And that's the biggest thing you should take from this video. When you have a runner on a short, for example, you can roll that into your next long. Now, obviously, it's not guaranteed it's going to work, and do make sure it is a valid trade and you're not just trying rubbish. But with this, it was pretty simple. The short from here was running 10% after I'd already banked 2.5. So then I risked 8% on this trade, and the partial was then worth 4%. So just across these two trades now, I have banked 6.5%, and I still have this position open. So what I want to do is show you, obviously it does look like this trade lost based on that, but let's look at these screenshots here. You can see this was the short. I then obviously upped my risk and rolled my profits from this short into this long, and always make sure guys that it is a counter trend. So I wouldn't roll this short into another short personally. I would only run the short into longs. So that's another tip to take. So far I've had two trades. Originally what was 5% risk, I've now made back 6.5 and I still have a position open. So that is the biggest thing to take from that, is simply that I've already made back my initial risk, and every trade I take from this point in the other direction of this trade is then risk-free. Super simple stuff. So then obviously what was happening in and around here, there was no trades, nothing at all. I'm not forcing trades. If there wasn't a trade which fit the strategy, then I was not taking it. However, then finally, the other day, we had this position here. Now this position here was once again in the opposite direction of this runner. If we are saying that obviously for every 50 pips on this trade, it is worth 2.5%. By the time this trade triggered, it was running 500 pips. So it was running 10 to 1. So at this point, the trade is running 25% risk-free. Now, once again, I didn't risk the whole runner on this position. I actually ended up risking about 11.2% on this trade, risk-free. So obviously, if this trade would have lost, all I'd have done, instead of closing the full position at 25%, I'd have only had to close half of it, obviously, because then it would have covered my loss. Luckily, as you can see here, this trade then went on to win. So you can see, once again, we're looking, you see the short here, still open, still running. And then this position here, obviously, like I say, 11.2% risk, risk-free, meaning if this trade lost, I could have just closed a part of this trade here, and it would have paid for it. Luckily for me, the trade went 1 to 1. I took my 50% partial. So at this point, once again, I have then banked 5.6% in a partial. Add that to the 6.5 that I've already accumulated over these positions, and you are looking at 12.1% banked based off an original 5% risk, because every single one of these trades here is risk-free. So all the profits I make are simply added to this initial risk. So that's perfect. So with that one here, I'm currently 12.1% up in close positions, and I still have this trade running at this point at the profit pretty much, let's call it 400 pips, so 8 to 1. So then once again, I am simply just keeping this position open. This position was then closed break even, which is fine, because in this moment here, if the market goes up, I make money, and if the market drops down, I make money. Super simple stuff, easy. Now, let's look at this position from this morning, and what I actually want to do is thank my friend Jack for this position. It was his analysis. Due to the fact, obviously, that he did do this, what I'm going to do is post his Instagram below mine. So if you want to see any of his stuff, he did actually call this trade in his group, and it is currently running 4 to 1. But let's go into exactly what happened. At this point here, because this was a daily setup here, this trade was running about, and let me do maths here, about, let's have a look. Let me just quickly work this out. I don't know why my mind's just gone blank. But you've got 750 divided by, and it's 14 in it. So 750 divided by 50, yeah. So it's pretty much running 15 to 1. So you've got to think now, this trade here is running 15 to 1. And remember, 50 pips, 1 to 1 is then worth 2.5. So at that position here now, you can do 2.5 times it by the risk to reward, which obviously is 15. And then what I managed to do this morning, and again, it's on my Instagram, everyone's seen it, I managed to risk 30% on this position risk-free, meaning that the partial from this position was 15% at 1 to 1, which was only 50 pips. So because of that, you can see this position is still open. This position is still open, however, the partial was taken. Just to show that I did actually take the trade, this is it now. And I say now, we're at 1851 at this point. Obviously, we've surpassed that now, but it was this here. So you can see this position, what originally started off as 5% risk, then turns into a 30% risk-free position. I was happy because I'd already banked 12.5% along the way. I was more than happy that if this trade lost, all I would do was close this trade here. The reason that I obviously risk so much is because these here were 1 hour setups, whereas this trade right here was a daily setup, so a lot stronger than these positions. So because of that, what was 5 risk? Obviously partial, 2.5% per 50 pips. Running 750 pips, 15 to 1, risking then 30% risk free on this position. And you can see because of that, I then partialed an extra 15%, taking the tally. And if we just go and add this up as we go along, 2.5, add 4, add 5.5, add 15. And they are the partials taken for this trade. So if I quickly just add that up, you've got your 12.1, and then you are adding that to 15. So you then have 37.1% in the trades, which has been done in partials. I still have this trade open here with 50% running, and I still have this trade here with 50% running. And it's pretty much as simple as that. So all you can do is take a partial from a position, leave a runner, and then use the unrealized profits from that runner to pay for any counter trend trades. Because now what I can do, let's just say for argument's sake with this gold, let's say I wanted to take a position here. I'm not going to, but let's just say I could once again, because this sell is open, risk the money on a buy because it is counter trend, and then potentially ride the wave back up. If I was to then ride the wave back up, you can see this trade here may well get closed break even, but that's fine because the runner here is worth more than what this is. So you're compounding your lot size is getting bigger as you go along, and then obviously by the end of it, you really can compound your account. And as you've seen here, you've gone from 5% risk to making 37 risk-free. And once again, that is based on 5% risk. If we want to do the maths in terms of 1% risk, instead of it obviously being 37, it would be about 7% made risk-free if you were risking 1%. So I know obviously the 30% does sound amazing, or the 37, sorry, but please take into consideration that is based on 5% risk. On 1% risk, you are looking at about 7% made risk-free, and then obviously you've still got these positions running now. So I hope that quick video has helped you guys in learning the power of compounding. Any questions at all, obviously just put them below. Be happy to help. As previously mentioned, my Instagram will be in the top line and Jack's will be in the second, obviously for credit for sending this trade. But yes guys, thank you for watching this video, and I will see you in the